But here's an exclusive global voice, Jim Walker of Alethea Capital, known for accurately predicting the 2008 financial crisis, saying that the current sell-off is not similar to the global financial crisis and that he remains bullish on India, China and Vietnam.
Yep. Much weaker economic activity in the US going forward. The dollar is going to weaken. It always does in the run into a weakening US economy. And if that's the case, then there might be problems in US stock markets, but in actual fact, it will be very good news for Asian economies, for emerging markets generally, because it will take some of the pressure off companies who have borrowed offshore. So, you know, there's swings and roundabouts with these moves, but the baseline is really to say we don't know yet whether this is a true correction or whether it's just one of the head fakes that we've had so many times in the last 10, 15 years.
Jim, so if dollar is looking weak, till what levels do you think dollar potentially could correct? Could it be a 10% plus correction for the dollar?
Yeah, I mean, that's exactly the kind of range that I would be looking at when we look at past recessions in the US and slowdowns in the US. 10 to 15% on the dollar as a correction is not at all unusual. And that's really been our forecast, unfortunately, too long, that there was going to be a slowdown in the US and there would be a significant dollar correction before that slowdown really materializes. But I think, yeah, we could easily see a 10% correction and then a bit more in the US dollar over the course of the next 9 months or so.
Now I've got a list of where you've been bullish on and what are you bullish on. I'm just going to again bring this out for the perspective of our viewers here so that they can relate to some of your long-term forecast and how you've really been pinpointing some big trends and how they have now, you've really got them accurately correct. In 2022, Jim was recommending to his subscribers and clients long blockchain, which is Bitcoin. Then December 2022, long Sensex. Look at the return from there. There was a short recommendation in 2024, short SET, and that also has done reasonably well. But currently, he's bullish on gold. He's bullish on copper. Now, Jim, copper does well when the world does well, which is, it is a representation of industrial economy. Gold does well when there is uncertainty in the world. So they both, in a sense, are not joint at the hip. They are they have their converse correlations. But you're bullish at copper, which is a hedge, gold, which is a hedge, and copper, which is a bet on growth.
Yeah, it's quite interesting. We brought both of those longs into the global strategy at the same time, but we tried to explain that this wasn't the usual kind of gold, copper, lockstep, if you like, the commodities are moving. It was very much a case that we were trying to say that people should be long gold as a hedge against what central banks have been doing, and in particular against what advanced economy governments have been doing over the course of the last decade, and that's really spending money that they don't have. So fiscal deficits have blown out of all proportion to where the economy is supposedly in the economic cycle. Government debt levels have gone up dramatically to over 100% of GDP. You know, India keeps worrying about its debt position. The forecast for the central government debt in India by 2030 that it will be around about 50% of GDP. Every advanced economy that we look at would be desperate to get to that kind of level. I mean, India is a paragon of virtue in comparison to these countries. So what we were trying to say with the gold long was that, you know, bad behavior has its consequences, and people start to lose faith, especially in the currencies that central banks and governments are printing, paper money. So it was time to be much, much more aligned with the old-fashioned currency, the one that doesn't get printed out of existence, and that's gold. The copper call was actually, and we tried to say to clients at the time that, this is a 10-year call. It's not a 1 to 2 year call. Gold could easily have been a 1 to 2 year call. The copper call was about the green transition, the carbon neutrality, renewable energies, electric vehicles, because all of that is incredibly copper intensive. And the truth of the matter is, Nikunj, the supply of copper is constrained. It takes a long time to sink copper mines and to actually find some of the copper mines, and then to bring the production on stream. The rate at which governments and the world is moving towards this transition is too much for the copper industry to handle. So what we were really saying there is that demand will outstrip supply dramatically over the course of the next 10 years. Therefore, it's very sensible to be long copper.
Jim, you are bullish on India and you think China will be stable. So if our viewers have to really choose, should they lean towards India more or should they move out of India to China? Because you've given perhaps equal weightage to both is what I understand.
Yeah, this is a difficult one, Nikunj, because my own preference when I look at the state of policy generally, so monetary policy, fiscal policy, and exchange rate policy, India looks to, I said this in a report that went out yesterday to our clients, that India looks better to me now than at any time in the last 30 years in terms of policy stability and policy certainty. I think the authorities have done a remarkable job in actually stabilizing the whole macroeconomic structure in India and framework in India. And that's a very positive backdrop for me. The thing that they need to address now, and I think it's very, very clear that the government understands this, and it's going for it over the next 1 to 2 years, and that's deregulation, ease of doing business, cutting red tape, and allowing the small and medium-sized companies in India much freer rein to grow the economy and grow their labour forces. That's the next phase in India, but that's nothing to do with macro policy. That's everything to do with micro policy. So, I've said to clients this week that this is the time to absolutely double down on the long on India, go much, much longer. And although worry about the valuations in the Indian stock market, my view is that economic growth is going to take off.
All right, so that's the view coming in from Jim Walker.
If you like this video, then like, share and subscribe to ET Now.